Thursday, May 25th, 2023, Monaco 64, home of alternative economics and contrarian views. Today we're going to look at why, in my opinion, the national debt is a really bad idea, and not just in the United States or the UK, anywhere really. And the reason I'm covering this right now is that there's so much talk and debate about the debt ceiling in the US. But yeah, the national debt is something that's not necessary, and that's what we're going to look at. Before I do, just a little bit of an update on Rudy. Yesterday was a beautiful day. I think today will also be a beautiful day. And my wife went out with some friends. So Rudy and I went to the park and we had a really good time. He's going off the lead already, playing with a lot of other dogs. And then we went by the lake, and I kept him on the lead there. We went to the edge, but then someone came, a dog walker came with about 6 dogs, and they all went in the lake. It's not very deep. And she asked me, well, do you want him to go? I said, I'm not sure. And she said, no, try it. And he did. He had a really good time. And he went swimming. Yes, Rudy's already swimming. So here's the little clip of him swimming for you.
Yes. Well done. That's a great job. Look at you.
All right, back to more serious things. The national debt. And I'm going to recommend a couple of books today. The first one, I've actually recommended it recently, and it's by William Cobbett. He's an English, politician, essayist, political commentator, even though you couldn't commentate too much back in the early 1800s, or else you'd get in trouble with King George III, and that's what happened to him. So he was put in jail for a couple of years. I forgot the jail now, but and when he was in jail, he wrote a series of letters entitled, and they put it together in this book, and this book is entitled Paper Against Gold, containing the history and mystery of the Bank of England, the funds, the debt, the lowering and the rising of the value of paper money. So I highly recommend that. There are some other editions. This one here, they've just printed right out of the letters that he did. Is sometimes hard to read. There are some other editions that are easier to read. But it goes on to explain how before the central bank, and the central bank was, of course, created, the Bank of England, by royal charter. So it was a monopoly, and it was used to basically start the national debts. Prior to central banks, monarchs, and nations were run by monarchs back then, and the state, they had to be careful the kind of adventures and how much money they spent, because they couldn't lumber it on the public in the form of a national debt, because people wouldn't take it. But the central banks made it possible, and I think this man here, Andrew Jackson, knew all about it. So I recommend this as well. I read this many years ago. I think I'm going to read it again. It's Andrew Jackson, Life and Times by H.W. Brands. H.W. Brands also wrote The Age of Gold that I've recommended recently. So what does it say here? The extraordinary story of Andrew Jackson, the colorful, dynamic, and forceful president who ushered in the age of democracy and set a still young America on its path to greatness, told by the best-selling author of The First American. The most famous American of his time, Andrew Jackson is a seminal figure in American history. The first common man to rise to the presidency, Jackson embodied the spirit of the vision of the emerging American nation. The term Jacksonian democracy is embedded in our national lexicon. Why am I recommending Andrew Jackson when I'm talking about the national debt? Well, because he was the last president to pay off the national debt, because he thought this of a national debt and of a central bank. And these are some of his quotes. You tell me that if I take the deposits from the bank and annul its charter, I shall ruin 10,000 families. I guess that's the bankers and their hangers-on. That may be true, gentlemen, but that is your sin. Should I let you go on, you ruin 50,000 families, and that would be my sin. And I would say it's a lot less than 10,000 families now, and it's a lot more than 50,000 families that the institution of central banking and the national debt is ruining, I would say. Jackson's distrust of the Bank of the United States, I think it was the second bank, he let its charter run out, of course, was also political, based on the belief that a federal institution such as the bank trampled on states' rights. In addition, he felt that the bank put too much power in the hands of too few private citizens, power that could be used to the detriment of the government. So there you go. I think it was the charter ran out 1837. But yeah, this is how he paid off the national debt, and this is on debt.org. I'm going to put a link to this page in the description. It says President Jackson cuts debt to zero. Can you imagine that? The War of 1812 more than doubled the nation's debt. It increased from 45.2 million to 119.2 million by September 1815. Yes, those wars, unnecessary a lot of times. The Treasury Department issued bonds to pay a portion of the debt, but it was not until Andrew Jackson became president and determined to master the debt that this national curse, as he deemed it, was addressed. By selling federally owned Western lands and blocking spending on infrastructure projects, Jackson paid off the national debt after 6 years in office. This actually created a government surplus that Jackson divided among indebted states. The time of prosperity was short-lived as state banks began printing money and offering easy credit, and land value dropped. But I guess it wasn't until 1913 that the central bank came along, the Federal Reserve. And you might say, and I think the excuse, and I think Hamilton was a national debt man. I think he was into a central bank. And there's this fallacy that you need a central bank and a national debt to have national prosperity. That's the whole selling point. But I would say, are we right now in a really good position in the West? We have national debt up to here. We have had endless wars since 1913 and even before that in Europe. We have massive corruption. We have the melding between the government, which is run by the banks, and big corporations. We have massive wealth inequality. And yes, we have a welfare state as well that I think was thrown in there to placate the public. But all that the welfare state does, and I know a lot of you are going to disagree with me, especially here in the UK. You're going to say, oh, we have free national health. But we need to think outside the box because is the welfare state, and even in the US, is it really providing something that is good and that is solid? No, it's falling apart. And all it's done is made people dependent. A lot of people, instead of looking after themselves, their families, and becoming self-reliant, they always have in the back of their minds, well, I can have a national pension, and I'm going to have this and this and that. And it actually makes things worse. And if you can really tell me that things are okay now, and that a new government or a new party that comes into power will solve all the problems of the welfare state, that they will clean up all the corruption between state and the private interests, then yeah, keep that national debt. So what would be the way to pay off the national debt? Well, it's very simple. Just right now, I don't think we could sell some land here in the UK or in the US to pay it off. It would be impossible because it's gotten too big. Andrew Jackson had the luxury that the debt hadn't really grown that much back then, that he was able to pay it off. I'm afraid right now the only way to pay it off would be to let it default completely, and then abolish central banking. I saw that Christine Lagarde, the president of the ECB, who's actually a convicted criminal under French law, but she was given a suspended sentence, and that was when she was head of the IMF. She was commemorating yesterday with all the hangers-on in Frankfurt from the EU and Germany, the 25th anniversary of the European Central Bank. So hopefully in 25 years' time, the European Central Bank will be history. So will all the other central banks be history. And you might argue, well, how can we have private banks and no central bank? Well, that would probably be the best thing. Private banks that are actually careful with their capital, private banks that don't depend on the lender of last resort, right, and becomes irresponsible, and also if we don't have central banks, governments won't be able to be as big as they are. And again, if you tell me that it's been a good thing to have right now, I guess the US debt is 31.8 trillion, and all the rest, of course, all the unfunded liabilities, which are together with the debt running at a total of 200 trillion. There wouldn't be enough land to sell in the US for businesses to pay that off. So yeah, letting it collapse would be the best thing. Yes, people would get hurt. The people at the top, the 10,000 families that Jackson said, and I would say they're probably a lot less now, they would suffer, but I think they'd still be okay because they're very wealthy, they have hard assets, and or they might not. Yes, there will be a lot of suffering because this system of national debt and central banking has also made the public complacent about things. They've come to depend on government, and that's why I've designed stuff on my Teespring store. They call it Spring Store now, about socialism. And it's not just socialism, it's this form of capitalism, this central bank capitalism, I would say, that is really destroying the prosperity for everyone and making us really enslaved by this national debt. So yes, this was a campaign back in the early 1900s when the Conservative Party was still conservative, and they said socialism throttling the country. I would say socialism is throttling the world right now. And yeah, and it's not just on the welfare side, but also on the crony capitalism side. So there you go. With that, let's look at where the markets are. And let's look at where the gilt market is, gilt yields. It's starting to come out. It came out yesterday afternoon in the UK. Yesterday morning, I already covered it with Clive. I was saying it's breaking out. This is bad news. And even on the 19th of May last week, I pointed out that the technical picture for yields look like pointing towards higher yields. So you've been warned here. And you had a step ahead of everyone else. I'm sure a lot of people out there are still not going to realize that mortgage rates are going to go through the roof here in the UK. And I said back on the 19th of May that I could see it at double digits by 2025. So, excuse me. Let's have a look then where things are. It's 8:30 a.m. London time. We've got spot gold at 1960. It's up about $4. High's been 62, low 54. Silver is up 5 cents, 23.10. Low has been 22.89, and the high 23.13. The Dow futures down 72. Nasdaq futures up 200. So I haven't seen what's out there in terms of the tech sector. Maybe you can tell me in the comment section. The S&P 500 is up 16 points, or 1/3%. And right now there's a lot of comments from McCarthy, from the White House, and a lot of to and fro about this national debt ceiling. But anyway, to the currencies, sterling is down 0.2%, 123.44. The euro is down a quarter, 107.23. The dollar is unchanged versus the yen at almost 140 though. So the dollar is pretty strong. The yen is a trashy currency, we know. It's not a safe haven. It's making new lows versus gold, or very near new lows. The dollar versus the yuan is up 1/3 at 708.53. To the other currencies, we've got the Aussie dollar down 0.2 at 65.30. The dollar is up slightly versus the Canadian dollar, just above 136, and the Kiwi dollar is down 0.4 at 60.85. To the general commodities, we've got WTI crude down about 2/3% at 73.87. Brent is down 0.5%, just below $78. Platinum is unchanged, trading around 1,028. High-grade copper is up 0.5%, just below 360. So now to the fun part. Not really, but if you don't have a mortgage or too much debt, you're just looking and saying, thank God I've gotten out of a lot of my debt. The 2-year yield right now is up another 9 basis points. We're almost at 4.5%. We're at 4.46. I think on the 19th last week, we're just approaching that 4%. And I said, if we break through here, it's quite serious. And it's gone up a lot. 0.5% on the 2-year in less than a week is a big move. The 10-year is up 10 basis points. That's at 4.32. And the 30-year is up 10 at 4.64. So approaching 5%. Aside from making mortgage servicing very expensive, this is going to make the servicing of the debt by the government more expensive. It's going to make serving of company debt, credit, more expensive. And it's not going to help the economy, that's for sure. What about the US bond market? Let's have a look. Treasuries, where they are. Well, we got the 1-month T-bill, which would be affected if there was debt default by the Treasury. That's trading at actually above 6 right now. It's at 603. So there you go. The 2-year yield is up 5 at 440, and the 10-year is up 3 at 375. So there you go. With that, I'm going to wish you all a very good day. Take care. Bye.